Welcome back to the Rob Report, where money meets news. All right, so I'm going to start breaking down what happened. Basically, what just happened, why the Fed cut rates, the outlook. This is a nice little PDF. All right, so starting off with the headline, what just happened? The Federal Reserve just cut interest rates by 25 basis points. The first cut of 2025. The new target range is 4% to 4.25%. This marks a major pivot in Fed policy. They're officially moving from hold to easing. Okay? Going into why the Fed cut rates. Job growth is cooling. Okay? The Fed cut the rates because the job growth is cooling and unemployment is rising slightly, signaling a softer labor market. Inflation is falling, but it's still above the Fed's 2% goal. The Fed wants to balance inflation control with avoiding a recession. Jerome Powell thinks it's too late. The markets are thinking that it's too late. The Fed is looking to balance inflation controls by avoiding a recession. Okay? This cut is meant to ease financial pressure without letting inflation rebound. Okay, so that's why the Fed is cutting rates. So the outlook on this, what's coming next? All right, the Fed officials expect 2 more rate cuts in 2025. If data continues trending softer, markets are betting that those cuts come before the year end. Obviously, we're in September. We have 3 more months. So we're in the next 3 months, we're cutting rates two times. All right, so markets are betting that they're going to come before year's end. However, sticky inflation or strong jobs data could delay or reduce those cuts. We're going to go funneling up to our risk factors here. All right. So you can read along with me. Tariffs and global trade tensions, especially with China. I am dropping a video with China and NVIDIA, telling NVIDIA that they don't want to buy their chips no more and that prices could keep elevating. If core inflation spikes, the Fed may pause or even reverse cuts. If the labor market stays strong, the Fed might not cut as aggressively as expected. And then market volatility is likely if the Fed and investors disagree on timing. Looking at my view, my summary take on this is, I believe that the Fed will cut at least 1 more time this year, maybe twice. Rate cuts will support markets short term, but don't expect a full pivot on quantitative easing. Okay, we're trying to keep up here. Okay, we're trying to keep up here. We're in a data-driven environment. Every CPI, PPI, and jobs report matters right now. This is not a risk-on green light yet. Stay tactical and stay selective. To close it out, some of the actual takeaways you can have from watching the report is this. Watch for market rallies on rate cut optimism, but don't chase blindly. Stay alert for surprises, inflation reports, because they will move the markets fast. Focus on sectors that benefit from lower rate cuts like tech, housing, consumer credit, okay? And stay tuned. The next Fed rate move will depend on data. I'm going to keep you updated on when the rate, as soon as I get the word on when the Feds are going to cut next, okay? But the next meeting is in about 6 to 8 weeks. I'm going to give to you the next rate cut, all right? With that being said, that brings us to the end of this video. You've been watching the Rob Report, where money meets news. Be sure to like, comment, and subscribe to stay up to date with news that moves not only the markets, but your wallet. And be sure to grab the PDF cheat sheet. Link is down below. And I'll see you in the next video.